All righty. Good morning, folks. This is Blake Morrow, and you're listening to F.A.C.E. Not sure where Coach is at. He's, after a holiday weekend, there's a good chance that he might be sleeping. He does have a guest today, so we'll see. We'll see. And I'm glad you guys and gals could join us. I hope you all had a wonderful Christmas holiday. Excuse me, I was just getting a drink of my coffee. I hope you guys all had a great Christmas holiday. It was a really, for us, it was, pretty nice holiday season. Hopefully you all got to see friends and family over the weekend, even if you don't celebrate Christmas. For us, it was a lot of people were sick, with COVID and whatnot. And that reminds me, I want to talk a little bit about COVID as well, because as we go into this week, one of the things that it's going to be a bit of a swoon for the markets, and one of the reasons why the markets are up this morning, you see futures are up this morning, is because the markets are really playing off the idea that the COVID policy in China is going away. But here's the thing, I know China is going to have a no COVID policy. And by the way, I don't know if Stelios and Steve are here.
Hello, Merry Christmas, everybody.
Hey, Stel, how's it going? Hey, I was just talking about, one of the reasons why, the markets are higher right now is, the China no COVID policy. It's reopening, the country's reopening very quickly, and the markets are really enjoying it. And you can see, let me pull up some of the Chinese markets really quick here. You can see how, where are they? Here we go. You can see how the Chinese markets have also done, really well. We're up against 200-day moving average here at the Chinese F.A.C.E, which is their major index. Here's your Hong Kong index, Hang Seng, which is, up against 200-day as well. The thing is, they may not have a zero COVID policy, but COVID is quite gosh, it's it's 6 o'clock in the morning, so I need some help here. It's transmittable, very easily, and there are so many people that I know that have COVID right now that are sick, and you can say, well, it's a lot like the flu. Yeah, but if you have all of these, and I agree it is, but if you get all these people that test positive for COVID in China, because it's going to rip through that country really quick, right, as they reopen, how are they going to take that? You know what I'm saying? So I guess Stelios was here, but he's not here anymore.
No, I am here. It's
So I mean, what do you think? I mean, they may have, like, they may backpedal a little bit on their zero COVID policy, but if they have it go through the country in a rip-roaring fashion, are they going to do that anymore? Are they going to start? Will they put on some restrictions there? That's the question I got to ask.
My answer is very simple. You cannot have a zero COVID environment. I mean, this has become now like the flu, like all other viruses that we get on a seasonal or not basis. So you just can't have zero COVID, unless everybody's locked down in their houses forever.
Well, no, that's I agree with that.
They're going to have to backtrack on what they're trying to do. So they say we want zero COVID policy. Well, we can't have that. So at some point they're going to have to backtrack on this. They're going to have to make compromises. I think that's because I'm sure they understand there cannot be a scenario where there is no COVID. They just simply cannot, unless everybody's locked up in their house.
Right. But how is it going to be when China, like I said, COVID is going to rip through that country like it's nobody's business. It's going to, right? I mean, it like it is here. I mean, everybody gets COVID. Everybody's got COVID. You know what I mean? But does China go, oh, wow, I don't know if we really want to do that. They backtrack and start closing things down. I mean, I think that's what I think is the risk for China right now. It's not
and for markets in general. I think what happens is COVID starts taking over again in or spreading in China, and then they're going to have to try and put some measures again, but every time I think they're going to be weaker than the previous time. They can't have what they did the first time around. Remember what they were doing first time around? They were locking their people in their houses. They were, barricading them in their houses. They can't do that again. They're not going to do that again. So every time there's a wave, they're going to do something or try to do something which is a little bit weaker as a response to the last time, until we get to a point where they accept that this is something that's going to be coming and going every winter or every year, and we just accept it, and then it becomes nothing. Because I'm seeing here in Greece, right? We've completely opened up for months now, schools, everything, and I hear of friends and family who get COVID. Not a single person that I've heard in the past few months had anything serious. So it's like a cold. It's like, my throat hurts a little bit. I'm a bit, I've got the sniffles. That's it. So we're just going to have to accept it. And they are too. The question is, what is going to be their next reaction, which, we will see it when COVID starts spreading in China again. That's a big question. That's what the markets, that's what's, for bulls, I think this is a risk. It's a big risk.
Yeah, that's exactly it. And that's what I think is the risk too. It's like, when COVID goes through, their country, and it goes through rapidly, because it is very transmissible and, and contagious. That's the word I was looking for earlier. Holy cow. It's just early in the morning and coming off of sleeping pretty well for the last couple of days. I'm at a loss for words this morning, but because it's so contagious, it's just going to go right through the country, and how they respond is going to be very, very key. Now, one of the things I want to talk a little bit about this morning is about your home currency there, Stelios, is that the euro's holding up really well.
Drachma.
I mean, the drachma. That's right, Steve. The drachma. Hey, do you still keep drachmas around the house just in case? You guys know? Do you guys realize? I got drachmas at the house.
I've kept some as a souvenir when they were being phased out.
Oh, you did? Okay, you did.
As a souvenir,
I have some as a souvenir as well. So that's interesting. Stelios, he's got a, I know he doesn't want to admit it, but he's got a stash,
a truckload of drachmas.
Yeah, they're all in his safe next to his silver.
Yeah, they're worth like 12. They're worth 12 cents or something like that.
So, well, the euro is actually holding up really well at this time, and I think a lot of people are just trying to fade the euro or buy the dollar. And I know it's coming off some resistance right now. And, I've traded the euro on both sides last week. You can see this very tight range. I mean, we were down below 106. I'm a buyer, above 106.25, and I was a seller. I haven't been doing anything, or I take that back. I did something here just a bit ago, but I'm not really doing anything right now too aggressive because it's holding up really well. I think a lot of people are probably sitting in this going, oh my gosh, how long am I going to be able to hold on to short euro if it continues to hold up here? What are you guys' thoughts about the euro? There apparently there's an article over the weekend, and I have to go track it down because I haven't read it yet. Over the weekend, I believe it was in the Wall Street Journal, that says that that ECB, their terminal rate is, well above where the market's at right now. So I found that kind of interesting when I heard that.
Yeah, I mean, for me, the euro in let's say more than very short term, I think is bullish still, and this is because of the ECB being more hawkish than expected. They've told us that they're going to do more 50s. I don't know if they're going to deliver that, but that's what they want to do. So as long as this is their rhetoric, I think the euro is a buy on dips. Now, of course, it could drop below 105.9. What's that level? Those lows? That will be a technical.
Yep. Yeah, it's 105.7, 105.80 basically.
Whatever it is, it could drop there. That will probably drive it towards the what is that, 200 EMA? Yeah, but I think I want to be a buyer on dips of the euro as long as this remains with the ECB, because they're going to switch at some point. They're going to pivot, of course. But for now, I think buy on dips.
Yeah, it's,
I agree
what do you
with
think,
Stelios.
Steve?
I agree with Stelios. It's all about interest rate differentials. The market had already priced in an interest rate differential between the euro and the dollar that is now closing, right? Because the ECB was not responding at all to inflation for a period of time, and everybody had given up practically on the ECB doing anything. And now finally the ECB is waking up. It's not doing much, but it's definitely doing more than almost nothing that everybody believed so. So that is what is keeping the euro so resilient that we've recently seen. So I think that, especially if the dollar has stopped, which is a rather high probability scenario,
You
the
think it is?
euros,
Yeah.
I think it's a rather high probability scenario, especially if we're talking about the DXY, specifically the DXY, with its specific characteristics, meaning being Euro-centric, right, in a big extent.
Yeah.
I think there is a very high probability that the DXY has already found a high, and I do think that the euro is probably going to remain rather resilient. So even if you don't want to be long the euro, which I wouldn't really blame somebody, I think the euro would be a very bad choice if you want to be long the dollar to choose the euro to do that, right?
Yeah,
I agree with that. I agree 100%.
right. I mean, if you're going to play the dollar on the short side, you got to go play in the dollar yen. I mean, that's like where I would be.
You have many choices,
focused.
but I think the euro shouldn't be one of those.
Right. Yeah. And you can actually see the euro is doing is really trying to break out this morning against the sterling. I mean, we're breaking new trend highs here. Yeah, we're coming off right now. You're seeing a little bit of a European reversal at the moment, where we get a lot of profit taking ahead of the North American traders coming in. But overall, the euro sterling is breaking higher. I was actually long this last week. I sold it a little early as it was near the 88% retracement. I played it early in the week over here. But yeah, this thing is really strong. And I think, you've got to be buying euros on dips, at least against different currencies. And yeah, and I agree with you, what you're saying, Steve. If you want to play the dollar, play it against other currencies.
Yep.
If you want to play it on the long side, or excuse me, on the on the long side. So, but short, the dollar against other currencies makes sense. Sterling's holding up pretty well. The Aussie actually is I'm surprised the Aussies is holding up as well as it is. And the reason why I say that, and you could say, well, it's China and everything else. It's because it looked like it was going to roll over. It looked like it was going to, start to see some downside after rejecting the 200-day moving average a couple of weeks ago. I was like, okay, well, it's going to give us an opportunity to be a buyer, a lot lower. And it really is, held up well. But that could be with, the S&P also, holding up, relatively well as well. Now we are in that period into, the period of very low liquidity.
Yeah.
There's very low liquidity. There's some good news, especially with China right now. A lot of good news in the markets, and the S&P is holding up relatively well. Do you guys sell the market here, or do you wait for this week to pass? What do you think, Stelios?
Good question. I think Santa Claus is real. I said it last week. So I definitely think equities are a sell, but not at these levels. I would wait for. Well, actually, I haven't got any targets yet, but I wouldn't. To answer your question, I wouldn't do it this week. No, definitely not.
Yeah, this is the week you want to be a buyer, right? This is because Santa Claus is real.
I think this is the week that probably the best idea is to be absent.
But how about if you need to get busy? You need to make money, Steve.
The problem is that, in my opinion, under conditions like these that we get in holidays, it's a fake dilemma, because the question should never be if you need to make money. Nobody said no to more money when they can, right? The question is what kind of risks you're taking to try to make more money. And, at least for my taste, the risks are not worth it.
My ex-wife never said no for no money.
Yeah, and you know what?
For more money.
There you go.
Hey, I'm going to tell you right now, I happen to be a junkie and I need to trade. So tell me, should I be buying the S&P or not buying the S&P? Should I be buying it or selling it? Give me either or, not
for me,
not
gun to your head,
either or.
Gun to your head, buy it here for me, just for a short-term trade though.
You know what? I think you buy the S&P until it hits the 200-day moving average sometime next week. Like you wait till, we're probably going to end up, rallying in this low volatility environment. We're going to kind of grind higher and break the 3,900, trip some stops, grind higher until the first week or two of January. And usually it's the first couple of weeks, not necessarily day one, which in this case would be January, 3rd, 4th, January 2nd. So not necessarily the day we come back on January 2nd, but you know what sucks? I'm looking at this calendar. Christmas happened on a Sunday. New Year's is happening on a Sunday.
Yeah.
Always the same day, mate.
So what is the bank holiday then for New Year? I'm just looking at
second,
this right
isn't
now.
it the 2nd of January?
Is it the 2nd? Is that what it is? Because I feel like we're getting gypped this year for holidays.
Yeah, we are. But
I mean, it is horrible. Like,
yeah,
look, Monday.
The 2nd is a holiday. The 2nd is a holiday. Yeah.
What is?
The 2nd is a holiday.
It is. Are you sure about that?
Yes, I can see it in the calendar.
Oh,
US, UK, Switzerland, Japan, everybody.
Oh.
And the whole week is a holiday for Greeks. No, I'm kidding.
Yeah, it is. Like, what the hell? I mean, seriously. Like, no, I was just looking. Okay, so it is. Okay, the 2nd is a holiday. Okay, anyway, when people are going to get back, it's still going to be very low liquidity when people get back into the markets, and you got to wait for a couple of days. I always have this conversation right at the end of the year. A lot of people are it's the first day of January, first day of trading, I'm going to get to it. Remember, there's a lot of plotting and planning that goes along in markets and funds. Everybody's talking about what they're going to be doing for the year, what their goals are, where they need to be, where they want to be positioned. There's a lot of strategizing going on that first week. So if you think liquidity is going to rush right back into the market on January 3rd, but it's probably not going to be the case.
Yeah,
it's going to be fairly
not how it works.
It's fairly thin, and you're going to have, like I said, you're going to have a lot of people just trying to figure out how they want to approach this year from a macro perspective, and then how they want to position themselves in the market. So you're going to see the liquidity will start to come back the first week. But I still believe that we're going to have the S&Ps a little bit higher, probably back up towards the 200-day moving average by sometime early January. And then we're going to have to see where the markets go from there. But I think one of the tailwinds that the market will have is going to be the Chinese markets reopening. You're probably going to hear a lot about that this week and next week. And as a result, you're probably going to see a move up. I mean, you look at copper. Copper looks pretty bullish here. We're above the 200-day. Oops, I didn't mean to do that. We're above the 200-day moving average right now. And that's the first time we've been, solidly above the 200-day moving average since way back here about middle of June. I mean, that looks pretty bullish.
Copper is driven by China, basically. Right?
It is.
So as China news improves, so does copper.
Yep. And that's why we're up over 2% right now is everybody's looking at this the story in China saying, well, if copper can't go down when China's locked down, oh, look, that rhymed. I almost felt like coach there for a second. It looks like we're going to, break past $4. If this thing breaks back past $4, I mean, it's going to be a pretty clean break higher, and that also, suggests that I should be looking at other precious metals too. Silver, I mean, dude, I keep expecting a pullback here, and it's not.
Yeah, me too.
So what are you guys thinking here with silver?
Well, me, I took off half my longs around 24, just under 24. I'm looking for a pullback towards the 2240s, but if we have a daily close above 2430, I'm buying them back.
I think nothing is impossible in the markets, but I still see both silver and gold appreciating within ascending wedges, with RSI in both of them clearly diverging. So despite being very bullish in the long term, I would be very, very cautious shorter term.
Okay, then ignore my buy level at 2430. I'm not buying anything.
If indeed,
oh come on, you're not going to chase it higher because
if indeed we see this week bringing some equity bid, etc., it's not unlikely that we will still see gold and silver creeping up higher. But I would be very careful chasing these moves up. I think we might first see a flash lower before we can actually get some, some proper action to the upside again.
All right. Well, let's see if we get a little bit of a correction there. Speaking of, what could use a correction, is crude oil here. Crude is nearing the 50% retracement after a false breakdown, and I'm a little worried about crude. I'm really enjoying the cheaper gas prices that we're experiencing here in the U.S. right now. So I'm a little worried that that crude might get a lift above the 50-day moving average, and we might make another run for the 200-day moving average. You guys have any thoughts here on crude oil?
We have a major channel that, in my opinion, defines the trend lower for the, yes, that one that you're about to draw. And now draw the parallel as well. Yep.
So that's the one that you're looking. So,
yes.
Then I would say if we get above the 50 DMA, previous support, current resistance, then you can say, well, it's Steve's channel resistance. That would be bullish, right there.
I think that would be super bullish if we actually break through that.
Damn it, I don't like you already. All right, Stelios, you have any thoughts here?
Not really. I see the same channel, and gun to my head, I think we're going higher. I think we're going to break that, but I don't have a position, nor do I look to put one on yet.
In my opinions, false breakdowns lead to breakouts. So you got a false breakdown here, probably going to lead to a move higher. Realistically, it doesn't mean I'm going to be playing it on the long side. I'm just I think there's a high risk that we do break to the upside. Hey, speaking of which, I want to talk a little bit about, if you have ForexAnalytix, just realize that our analysis is going to be a little bit sporadic, over the course of the next couple of days. And it was like, since the Christmas holiday. If you guys want to know where our, most current updates are, you can just go to the updates timeline. So you can see, what was the, what's the analysis that's been posted this morning and everything like that. Also, one of the ways to get caught up is, go into the live squawk feed. This is one of the best ways to get caught up what happened overnight. You just come read through this feed, about what's happening. It's nice to get all the major headlines that are actually moving in the market. And that's all on your mobile app too. And also on, obviously desktop here. And then make sure you jump in the chat room. Our chat rooms are kind of quiet right now. There's most of the traders right now are taking some time off, which, rightfully so.
Makes sense.
You notice Ryan and K-Man aren't around for the flow show. We've got a lot of people are out. Amanda's not in the chat room. Paulie's always attached to his computer, and a couple of us here, like Steve, Stelios, and I. Dale, like I said, coach is probably sleeping in and probably forgot to set his alarm. That's going to be my running assumption right now. But I want to say, if you're in ForexAnalytix, you're in the community, just realize that updates will be rather sporadic, for the next few days. Now we got about 5 minutes. I do think we have a guest coming in today. We do.
We have one scheduled, yes.
White Oak FX. I don't know who this person is.
I don't know the surname, but it is Kevin. If you're
Is it
here, let us
Kevin?
know.
Kevin, if
Yeah.
you are here, yeah, let us know. We'll see. I'm not sure who this person is. So anyway, we have somebody scheduled, but we'll see. All right, going through just
we do have two Kevins.
What's that?
We do have two Kevins in the audience as we speak.
Well,
I don't know if it's one of them.
That Kevin can chat to us in the chat box and let us know if it's him, if it's him here. So
Kevin Costner, no.
Real quick, what I wanted to cover, I want to cover cryptos. Did you guys get an opportunity to watch the Mark Yusko interview?
Not yet. Holidays.
What? I know it's holidays, but aren't you trying to avoid your son at some point?
Busy drinking, man. What are you talking about?
I mean, I try to avoid my kids. It
is extremely tough to try to avoid my son since he has a 39 fever.
Oh, that's not good.
Oh no, it isn't. And we're supposed to be living for like 3 days, go skiing in a couple of days, and now there is a big question mark if we're actually going to be able to do that.
Oh man, that is not good.
Yeah, he he woke up with a fever today, so yeah.
When do you guys leave?
Supposedly in 2 days from now.
You know what? Leave anyway, and then one of you stays with your son, and the other one goes and hits the slopes. That's what I would do. So that means that I would be hitting the slopes, and my wife would be sitting with my son. But that's just how it would work.
Right, sounds like a good plan, Katerina.
Anyway, so if you guys get an opportunity to watch the Mark Yusko interview from Trader Summit. So if you guys go to tradersummit.net right here, and this is a great way to get caught up, just go watch this Mark Yusko interview right here. Really good one. Regarding, whoops, didn't mean to do that. He's obviously talking about crypto, and he's knee deep in it, and but I still think it's worth watching. We're in a period where you're getting the like a very big lull in Bitcoin and in cryptos in general. But if you believe in cryptocurrency, wait, hold on really quick. No, that was not Dale. I was expecting a text from Dale this morning. He has not come back yet. Anyway, I am expecting the next dip that we see in Bitcoin or Ethereum, or in crypto, in the crypto space. I think it's going to be like one of those moves that you want to be a buyer. And so if I can get a move back, down towards 10,000 in Bitcoin, that's kind of where I really want to start putting in a foothold for myself, where I'm going to just pick some up and put some away. For me, Bitcoin is not a trading vehicle at this stage. I'm not sure where it's going to be a more of a trading vehicle for me, but it's getting to that price that I want to actually put some away into what do they call it, cold storage. So that's what I'm thinking about doing. But it is trading really heavy. I mean, it's not going anywhere. It is. I think we have another sell-off coming. You guys have any thoughts here about the crypto markets?
I agree. We've said this a few times. This consolidation looks very bearish. I have also said I want to get long some between 10 and 12K, but there's a lot of people who are saying this now. It's a lot of people who are looking at that area of interest because it's quite obvious in terms of price level. So yeah. I'm thinking maybe we get to 10 12K and we go straight past afterwards. I don't know. It's difficult. Have you seen Tesla, what it's been doing the past
few weeks? God, Tesla's getting absolutely destroyed
today as well, getting destroyed. And you know how many people I know who have been trying to buy this dip? It's like, it's 20% below the highs. Come on, it's a good buy.
One of my buddies sent me a text a week and a half ago. He's like, I'm buying Tesla. I'm like, good luck.
Yeah,
that's all he said.
We have been talking extensively in the past about Tesla, and people that have been with us for quite some time do remember that. We just got US goods trade balance.
Yeah.
Better than expected. Yeah.
Better than the previous number, but nothing that's going to move the markets. Now, people that have been with us know what I'm going to reiterate now. The valuation Tesla had was just out of this world. Is probably, in my multi-year of experience, the stupidest thing I've seen in the markets last for so long, because I've seen a lot of stupid things, but they usually haven't lasted that long as the Tesla hype did. In my opinion, if you objectively analyze things, I know it sounds kind of crazy because Tesla found a high at 415 and it's currently trading at 123. I still honestly believe that Tesla remains rather expensive.
Yeah, I agree with you. Sorry, I didn't mean to yawn on you, but yeah, no, I agree. I mean, from a market cap point of view, it really is. And I live in North Scottsdale, where kids at my kids that go to my kids' high school. I mean, there's Tesla 3s are as common as a Honda Civic, and so there's a lot of them around town where I live. They are very, very common around here, but I still am very skeptical about the stock price itself. And but it's going to be one of those that I think you have to be a buyer at some point. I just don't know where that is. Speaking of which, of being a buyer, there's probably some other things that you probably want to start, keeping an eye on. And I don't want to have this conversation right now because do we have our guest? Is our guest here?
I think he's here. Kevin, if you're here, I think I see him. Can you just write on the chat box, please?
Technically speaking, I would consider buying at $62. And I'm not joking.
Yeah, Tesla valuation had nothing to do with cars for ages. It's all about what they could invent next, right? Or come up with next.
All about hype and some kind of a cult approach, with Musk. In my opinion, Musk buying Twitter did some damage to that part of the proposition as well, because from being,
hey, Steve,
yeah, mate.
Can it for a second, Kevin? Hey, sorry, I just want to say, good morning. Dale is not here, but that's okay. We'll spend a few minutes with you and chat with you anyway. So I'm gonna find you, Kevin Araujo.
I have him. I'll promote him.
Okay,
you're gonna promote him. All right, sounds good. So we have Kevin from White Oak FX is here. Kevin, I'm not going to mutilate your last name, so we're going to bring you on. And
I would assume it's Araujo.
Okay, I'm going to let Steve mutilate your last name, and I'm not going to do it. So let's we're going to bring Kevin on, but Steve, go ahead and finish your
So I think with one of the damages, other than the obvious that the valuation was ridiculous, was that from being almost universally accepted like a messiah, Elon Musk now has also become a controversial figure.
Yes.
Yep.
Yes, he
Absolutely.
has been, and he has ever since his Saturday Night Live stint, where he screwed pretty much everybody. So, guys, I know Dale's not here, and Coach usually does the interviews. My thought is he's probably sleeping in, or didn't reset his alarm. Which, come on, we've all done that after the holidays. So, I'm not going to hold it past him. I'm probably going to get a text in about an hour and a half. He's going to be like, "Dude, I totally didn't set my alarm." So anyway, I want to bring in Kevin from White Oak FX. Kevin, how are you?
Not too bad, my man. Can you hear me okay?
I can hear you perfectly fine.
Nice.
Can you please pronounce your last name so Stelios and Steve do not mutilate your last name?
It's Araujo.
Araujo.
Right.
Interesting.
Okay.
Well, welcome. It's nice to have you here. I want to ask you, could you tell us a little bit about yourself and what you do over at White Oak FX?
I've been trading for, I don't know, just under 10 years. Um, I got my education from a school here in the city in Toronto. I'm just north of you guys, I think, and learned about supply and demand, and learned about the fundamentals of how the banks move the markets. So I got really interested in learning how is it that the markets are moving. We were told that they move randomly. So, how is it that the banks are controlling price if it's moving randomly? So I got really interested in that concept. And then when I heard about the banks, the large institutions having to report their positions to the CFTC, I thought to myself, oh my gosh, they're just basically giving, they're showing us their hands. So if I could just collect that information and piece it together and put it up on a spreadsheet and track what the institutions are doing, if it's true that the banks and the institutions are the ones that are moving the markets, I should be able to see what is about to happen in the markets based on the positioning of the bank. So I've been doing that for, about 9 years or so, and I've become pretty proficient at it. And I was sharing my analysis on social media. A lot of people saw it. People wanted more. They wanted to learn how I was doing it. And so I started a school and started teaching people.
Oh, and I want to ask you a question. Just because I spent many years trading with some bank traders, basically trading for a fund, and just probably my last really, 5 of my last 7 years, just trading on an institutional size levels. And a lot of the bank traders that I know, they've kind of moved away from the CFTC data because it's not as it's there's more information out there, especially in recent years. So how do you combat that? I mean, what technology has evolved, the way that the currency markets have evolved over the last several years. There's different methods to mask the way that institutions, quote unquote, show their hand. So how do you do that aspect of the business?
Well, first of all, there's a lot of misinformation out there with respect to the CFTC data and which data you should be looking at and how to read it. Okay, there's a lot of misinformation, in my opinion. So I've never paid attention to what anybody has said about how to study the CFTC data. I just studied it myself, took it upon myself to figure it out. And what I found is that, for instance, if you research how to trade using the CFTC data, a lot of what you're being told is you should be focusing on the commercial traders and their positions because they're the largest traders and they have the biggest size. And what I found is it's absolutely not true. It's the exact opposite of that. And when you realize why you shouldn't be following the commercial traders, they're mostly hedging their position. So they're usually doing the opposite of what they think the market is going to do. So unless you want to trade and do the opposite of what the market is going to do, you shouldn't be following the commercials. So I haven't found any problems with using the CFTC data to give me enough information for me to trade off of. I haven't come across any problems. It's tricky. It's tricky. This game is not easy, as you know. Because like I said, if you go to a bookstore and you buy books on trading, most of the information out there is not really going to bring in consistent results because you're not dealing with the reality of how the market actually moves.
So what have you seen? Like, obviously the euro has been the move in the euro has been staggering, and I think it's caught a lot of people off guard, especially over the last couple months. What is your data been showing you that could have that could have led you in that direction, that it was going to break higher? Can you give us an example or show your screen, kind of show us what you've seen?
Yeah, sure.
Yeah, let me go ahead and see. Can you go ahead and grab the screen, or do I have to do this? I think I have to do this. There you go.
I guess I just click on. How do I?
At the very bottom, it says share screen.
There we go. And
And do you have the ability to pick one of your monitors or your monitor that you have there?
yeah. You see my Excel spreadsheet?
I do, yes.
Okay. Do you see my trading view now?
I
No.
see just your spreadsheet.
Oh, so it's just staying on the spreadsheet. Okay. How do
Yeah, it's
I?
staying on that one screen. It's not going to show multiple screens, but although you can display the entire desktop.
Yeah,
depending
that'd be. I'm gonna try to figure out how to do that. Is there a way to?
What your best thing is, you can show your like spreadsheet here, and then you can bring over a chart, just move it over if that works for you. Does that work for you?
Yeah, I'm trying to share just the screen, so whatever I see on my screen, you can see it. Because right now, if I lower my spreadsheet, you still see my spreadsheet. Like if I minimize my spreadsheet.
Okay. But if you have, how many screens you have? Two?
I have two screens. Yeah, physical
Okay,
screens.
so I would actually. Oh, so you can't move like your charts over to your screen.
Oh, I can, but I think the option that I chose was for just my spreadsheet to show
Yeah,
regardless.
you'll have to stop sharing and reshare and show the desktop or the I don't remember how it calls it, but then you can have one on top of the other. So you can either share a specific window or your whole desktop.
Yeah,
So
that's
you
what I
have
need
to,
do.
yeah, exactly. So you have to stop sharing and start sharing again.
Stop share. Okay. You want to send me that sharing screen again, and then share screen. Hold on.
Yeah, I think
Yeah, it's a
from the
bottom
bottom.
bottom.
Let's see, Microsoft Excel or screen 2. Okay, I think this is it. You can see my spreadsheet,
Yep,
and then you can see my trading view now.
exactly. Yes.
Okay, thank you.
Perfect.
Sorry, guys. All right. So great question in regards to the euro. So we had this just play out recently. Okay, so back in late summer, July, August, what we were looking at was we were tracking the non-commercials. Okay, and what we saw was that they were very aggressive with their short positions. How do we know this? Well, okay, so I'm collecting the weekly CFTC data, but not just that, but I went to the CFTC website and I went to the historical pages and I retrieved all the historical data going back to the 80s on some assets that I track. But I only pay attention to the relevant positions, and relevant meaning, 20 years ago, the size of positions that the banks were holding were not nearly the same size as what they're holding today. So I use some of the features in Excel to take a look at and analyze just the data that's relevant going back to about, I think I'm doing it up until about 2010. I found 2010 till now is the data has been very relevant, meaning the size of the positions has been somewhat the same. And so what I was studying and paying attention to is there a certain amount of positions that the banks will reach that when they reach that limit, they tend to take profits? And I found that there was. And so I've been keeping track of what is the maximum size of short positions that the banks have ever held. And when they get there, when they get close to that number, do they start taking profits on their positions? And they do. And so what I found was back in late August, we were tracking their short positions. And as you can see, they were reaching numbers of 254,000. Okay. Now up here on my spreadsheet, I have the maximum amount short positions here being tracked, and it was 271,000. So I knew, and I have these cells set up for conditional formatting so that the deeper color red that the cells turn, the more aggressive the institutions are becoming with their position. If it starts to become less red, it's less aggressive, and so forth. If it becomes blue, for instance, that means their positions are very cooled off. They're not even focusing on those positions. So back in August, September, we saw their positions reaching highs of 254,000. Okay, their all-time maximum short position was 271. So we knew with great certainty that it was very likely the institutions were going to start taking profits on those short positions, because once they're filled to their positions to the max, there's nowhere else to go but upwards. Okay. Once you've already established such a short position, they can't keep adding to their shorts. I mean, technically, I guess they can. They could just have the government print more money and loan it to them, and they can continue. But that's not what I found that they do. When I track and follow what they have actually done over the last 20 years, they reach maximum sizes and they take profits. And so, as you can see down here in the chart, when price got down to the 95s, this is where they were reaching their maximum size of short positions. And we knew, they were hitting institutional buying zones. Okay, this big green area that I have drawn here, this is some of the supply and demand analysis that we did. And this was an area of great interest for the banks to be buying the euro many, many years ago. And so what we found is, if the banks were interested in buying something between a certain price many years ago, what tends to happen when price gets back to those areas, for whatever reason, is they tend to buy again. So as price was coming into this area where we knew there was a likelihood that they would start buying or taking profits in short positions, when we looked at the CFTC data and we saw that they were so overly leveraged with their short positions, we knew, coming into demand, 254,000 short positions, there was the likelihood that they were going to take profits on shorts. And when they flood the market with these short positions, what's going to end up happening is price is going to end up shooting to the upside. So that's what happened down here. And this move here, this reversal to the upside was mostly fueled by the closure of shorts. And then later on, they started coming in and started buying the market.
Awesome. All right. Well, so what do you use? Do you use technical indicators to get you into your trades? How do you go about that?
So I'm doing multiple time frame analysis. So I'm looking at usually 6 time frames, but I only look at the higher time frames, the 12-month and 6-month, just on occasion, just to get a good idea of where we are at on the higher time frames. Are we dropping because we hit a massive area where the banks were accumulating short positions, or are we starting to rally because we're getting some demand coming into the market on the higher time frame? So I look at those 2 higher time frames, but the majority of my analysis is done on monthly, weekly, daily, and then for timing entries on a smaller time frame, I use 4 hours. So I'm doing supply and demand analysis. Okay, I'm locating areas where the banks were selling in the past and areas where the banks were buying in the past. And I'm trying to determine whether those selling areas are going to be used once again for selling when those areas get contacted, or if they're only going to be used for profit taking on long positions. And I do this analysis on each time frame. And by doing this analysis on each time frame and determining whether these zones are going to be used for buying or taking profits, or if these zones are just going to be traded through, it gives me an idea of where the banks are pushing price and where the banks are going to drop price and reverse price from. So for instance, if I was thinking about trading the euro long, for instance, okay, what I would want to establish is I would want to establish that the banks are buying the euro. And we have established that they are buying the euro. Okay, we can see that as of December 20th, CFTC data, their long positions were 249,000. But here's the deal. 249,000 is not that far away from their maximum size of 266,000. All right. And as you can tell, when you take a look at the coloration of the cells, they've been getting redder and redder and redder. And the darker the red color, the more aggressive their position. So I do want to get into long positions when the banks are buying, but I don't want to get in when the banks have already been buying and they're aggressive with their buying, because I know it's just a matter of time until they're going to run out of positions to open, and they're going to start taking profits on those long positions. So even if the technicals are giving me an indication that price could rally up significantly, if I see that the positions held by the institutions are not in a situation that is favorable for me to accumulate a long position, then I won't look for the technical indications and technical signals to enter into a long trade.
That makes sense to me. All right. Well, Kevin, I'm sorry that Dale is not here. I have a feeling it's more of a holiday hangover type of thing.
Sure.
Than anything. But what's the best way for traders to follow what you're doing?
Well, I'm on Twitter. You can follow me at White Oak FX. That's the two letters F and X. You can follow me on there, and that's pretty much where you'll see me.
Awesome. All right. Well, I want to thank you for being here today, and I'm going to make sure that Dale reaches out with you, and so he can give you a proper interview, because I'm just not. I wasn't ready because I didn't know I would be here today, so I didn't do the research that I normally
That's all
do.
right, man. You did a great job. I appreciate being here, and I appreciate you having the time for me. Thank you.
Yeah, sure thing. Kevin, we appreciate your time, and hope you had a wonderful holiday season, and hope you have a happy new year, you and your loved ones. So
yeah, thank you so much.
And like I said, I'll have Dale reach back out to you, and I apologize for him, on behalf of him. I have a feeling it's, like I said, holiday hangover. So have a great one, and thanks everybody for tuning in today. We appreciate it. We will be back here tomorrow, so don't fret if you guys are wondering if we're going to be here all week. We'll be here the remainder of the week for the F.A.C.E show. So I'll see you tomorrow. So thank you, everyone. Thank you, Kevin, and Steve Stelios. Have a great one.
Thanks.
Thank you, everybody. Thank you, Kevin.
Thanks, guys.